And now we finish the part of institutional remark, and I will give the floor to my colleague from Milan, the head of our Milan office, our Veronica Gianola, that we will manage, will drag us during the presentation of companies, and of course from our lawyer and from our tax advisor. And after we will have also the presentation of Marposs with Luca and also with COBO. Please, Veronica, thank you so much to be here today with us.
Thank you. Thank you very much, Carlo, and to all the speakers and the audience. It's my pleasure to join this webinar and to moderate part of it, connecting from Milan in Italy. As you were saying, I will give you initial introduction about our group, which is DP Group. Okay, so as DP Group, we are present in China, in Italy, in Vietnam, in India, in Dubai, and we have a Russian desk. Our mission is to be present in every business capital of the world to make the global business environment better through our work. DP Group is made of 4 companies: D'Andrea Partners Legal Counsel, which is the law firm and assists clients in entering the market where we are present and be successful there. PHC Advisory Tax and Accounting, who is an accounting firm and is related all to the fiscal part and activities. Eastern Communication and Events, which we thank for powering the webinar of today, and takes care about the organization of events, communication and social media management. And Chance and Better, which is our company in charge of education, organizing trips in the universities and visiting students in universities. As Carlo was anticipating, we have published recently our International Practical Guide on Foreign Direct Investment in India, which is another guide adding to the other practical guide we have for China, Vietnam. This guide helps to do business in India into various aspects and investing intelligently in the Indian market, hoping that it could be a very useful tool to enter and to operate safely and correctly in the market. I would like now to go on with the speakers. So the next speaker will be Bosky Gokani. Bosky is legal advisor of the India desk at D'Andrea Partners Legal Counsel. She's law graduate from Mumbai University and enrolled as an advocate with the Bar Council of India. She has extensive experience with law firms, both in India and China, especially with regard to cross-border transactions to India. Today, she will give an introduction about the assessing of India post-COVID-19 and its recovery. Thank you, Bosky. The floor is yours.
Thank you very much, Veronica, for giving me such a wonderful introduction. I would like to take this opportunity to thank you all and to welcome you all for this very interesting webinar. And it is my great honor and pleasure to be able to co-host the webinar along with such stalwart dignitaries present here. I will just be sharing my screen. This topic of assessing India's post-COVID recovery has been talked about in a lot of Indian as well as international forums. What has happened is that COVID had gotten stuck, and India had to bounce back in ways that it could recover back from its to gain back the economic momentum. In my presentation today, my presentation today is going to be bifurcated into 7 parts, and we're going to be dealing with each part separately. The first being the effects of COVID-19 in India. The second being India's response to COVID-19. What are the regulations that have taken place and the amendments to the regulations? The FDI in India sustained. How has India been able to sustain the growth? What lies ahead, and what are we going to take out of this? Take out of this presentation. if I may begin. So in the early 2020s, when COVID struck the world at large, and India was also not left aside from the disastrous effect that it had all over the world. In early March, India had this, and they had its first few cases, and immediately India decided to lock its doors to the world. And on 24th March 2020, India declared a nationwide lockdown for 1.3 billion of its residents. This lockdown was initially for a period of 3 weeks, but however, looking at the surge in the cases, the lockdown was later enhanced. The locked only in the month of May 2020 that we saw some relaxation. I was unfortunately stuck in India, and I couldn't move back to China. And it was my first encounter with the lockdown in India, and we saw a total loss of life of 522,000 deaths, and the economical impact was also great, was also drastic. There was a contraction of a negative 7.3 GDP for the financial year 2020 and 2021. It was the highest ever in the history of in the Indian history, and we've seen that the recovery, that the effects of COVID have been drastic. Now, looking at this scenario where now that I am situated in Shanghai, and I understand the situation in India, I feel the difference of both the countries. In India, when we had a lockdown, the basic necessities, going out to grab your basic necessities or for your groceries, all those relaxations were there even at the period of lockdown. The hospitals were not that shut or not that restricted. The emergency medical services were being provided. However, in China at present, there has been a complete lockdown in Shanghai, and even stepping out of their own houses has been difficult. So we see a little liberalization in India as compared to what we see in China. But yes, with the zero COVID tolerance policy that China has, it's doing its best to recover in ways that probably India couldn't. Going back to my second slide would be the impact of COVID. The India's response to COVID-19. Now, what happened is when COVID-19 was struck to India, Indian government had a massive step to take, and it had to regain back the economic momentum at one end, and it had to even curb the rise in cases. So there was this mayhem in the country, especially in terms of the rising amount of death rates, as well as the economy GDP being dipping. So the first economic relief that the government of India provided was by way of the PM Care Fund. This relief was provided to the victims of COVID. Now, this is an emergency fund that is being set up by the Indian government, and it is specifically provided in terms of those who were severely devastated or severely stuck by with COVID-19, and money was distributed, funds were distributed, and this was basically on donation. The fund was on international donations, as well as Indian donations, as well as individual donations, and till date, this corpus of the fund has been tripled to 10,990 crores. The second yojana the government had started, or the second economic relief the government had started, was the Garib Kalyan Yojana. Now, funds amounting to 1.7 lakh crores were distributed to the needy. As we saw, the lockdown had brought migrant laborers and daily wage workers to a complete halt. So people who were living off basic people who were living on daily wages were drastically affected, and they were not able to get any services or any food in any manner. So the funds were distributed to the poor and the needy, and this was a huge amount that was distributed by the Indian government to the people of the country. The third most important one was the stimulus package. Now, USD 22.6 billion was provided by way of direct cash transfers and food security measures. I remember when I was stuck in India during 2020, and I could see the government providing free ration, free food, free medical aid, free COVID facilities, quarantine facilities to a lot of people, and it was definitely difficult for the country to handle 1.3 billion of its population. But it had a massive task in hand. The government offices were shut for a certain period of time. However, later on, they were opened by way of appointment. And I remember when we were unsure of how we would move back to China, we wanted to open bank accounts and we wanted to start up businesses there. The government of India did the officers did give us appointment and did what the best they could to start back the momentum of the country. The fourth most important thing was the Atmanirbhar Bharat Yojana. Now, this was one of the highest packages ever recorded in the history of Indian history. This was the package of a comprehensive package of 20 lakh crore, which is approximately 10% of India's GDP, was given to MSME sectors, agriculture sectors, infrastructure, technology, and government reforms were introduced. Now, Atmanirbhar programs, or the self-reliant India that India is talking about at this point of time, was started way back in 2019 and 2020. Took the entire self-reliant momentum to another level. When we saw that the international order was changing due to the pandemic, and there was a need for a multipolar world order, and especially in terms of to curb the hegemony, and in terms of getting the world back to its pre-pandemic level, the self-reliance, or made the to be self-sufficient, was the most important programs. So a lot of efforts was done by the government, especially targeted to the MSME sectors. We understand that there was a liquidity crunch in the market, and especially the small startups, the people who were earning on credit systems. In India is very famous for its credit systems, so it was really difficult to turn the flow of money. So that time, government of India planned to give initiatives of what INR 20 lakh crore, especially for these small and medium enterprises, so that they could stay afloat, so that they did not have to go ahead and probably sell their businesses or close their businesses. There were bank loans given, there were subsidies provided, and all these initiatives, all these economic reliefs are still being given by the government to encourage startups, to encourage new companies, to encourage the economy, and to increase the FDI of the country. Now, the fifth plan that the country started was the Gati Shakti National Master Plan. Now, this was basically to boost the infrastructure. As we understand that infrastructure plays a very pivotal role in any growing economy. A growing growth economy is self-sufficient, and is reliant basically on the mobility of the people, the exports, the connectivity, the roads, the bridges, the railways. All of that is essential for the economy to grow. And what's more important is to organize for the government of India to boost the infrastructure, especially through planning, implementation, and monitoring under the public and the private partnership. So it should not be just the public, the government doing the funds, but it will also involve the private companies who would be interested to take these tenders and to be able to make these infrastructure, make these developments into the country. And of course, there are deals available. There are tenders that have been released every year, on every monthly basis, especially for this thing. And of course, the best tender does win. And there is a lot of participation from the private as well as the foreign investors in these sectors. Coming back to my fourth slide, we would check our growth. Now, we would understand that, of course, in terms of law, the country has to have laws that are keeping itself with the current trend. There has to be certain amendments that need to be carried out, considering we've been stuck by such a huge huge pandemic. And amendments to these legislations were the most primary important agenda on the government's list. What happened was, there were a lot of these compliances that needed to be carried out by the companies. As we all understand that Indian system is a little procedural in terms of the compliance part. So during the pandemic and even till date, it is very difficult, especially to carry out such compliances. So the government of India introduced a few reforms in its legislation. First being they amended the Companies Act of 2013 by drafting or by implementing the Companies Amendment Act of 2020, wherein they decriminalize various offenses that relating to non-compliances. Now, there were certain offenses that were categorized under the criminal offenses. These offenses, if they were done, and it would be very catastrophic if they had to be imprisoned, or it would be a difficult thing. So these offenses were now categorized under civil penalties or simple fines. In the event of a company or in the event of an entity is unable to carry out these compliances, there would be a simple fine or a simple penalty applied to it, and there was a rationalization to such penalties. So for a small offense, the country did not want to charge a huge hefty as a penalty. And of course, for startups, they were given benefits, especially in terms of subsidies and in terms of rebates and in terms of penalties that were lower in amount. The second one being the labor reform. Now, this has been talked about in India for a very long time. So India has a huge set of labor laws, and every state has the right to make their own labor laws. Now, what happens is when businesses go to India, it would be difficult to understand these labor laws because of their complexity. Now, the government of India had its massive task of reconsolidating all these labor laws and making them into 4 simplified codes. Now, what happened is the codes were simplified, and there were lots of procedural compliances that were eliminated. Especially 75,000 compliances were eliminated, and there was a consolidation of 29 central labor laws. This was done in order to ease the doing of business in India, especially in order to boost the economy and to ensure that there is a momentum in the country. The third one was the amendment to the SEZ Act, the Special Economic Zone Act. Now, this has been a recent thing where in this fiscal budget of 2022, the Finance Minister of India has suggested to rewrite the SEZ Act, and this has been done especially in terms of aiding foreign investments and to create an export hub in India. When India talks about make in India, and when India talks about bringing manufacturing sectors to India, it has created these zones, these industrial areas wherein they give tax benefits, they have lower tariffs when goods are exported and not sold outside these zones, and there have been a lot of rebates being given, a lot of subsidies in terms of incentives being given. Especially we had the opportunity to deal with one of our clients that wanted to set up a manufacturing unit in Karnataka, which is also known for one of his SEZ zones. And we were dealing with the hydraulic plant in Karnataka, and it was something that benefited the clients as well as they benefited the country at large. Now, my fourth amendment would be the amendment in the Insolvency and Bankruptcy Code. Now, especially in order to tackle the small scale and medium enterprises, where they had to, in the event of insolvency, in the event if they are unable to pay their debts, in the event if they cannot carry on with their business. So what to be done in this scenario? What should be done? The government for the first time introduced a pre-packaged insolvency resolution process. Now, this process is considered to be cost-effective as well as time-effective because it's a simplified process. The businesses or the insolvent companies do not have to go along with such lengthy procedures as prescribed in the IPC zone. This process is mainly targeted to the medium and the small scale enterprises. So, and default limit has also been increased to INR 1 crore. So there is a lot of good news, especially for medium, small scale enterprises to enter into India. My next would be, okay. Now, I'm sorry. Now we talk about foreign direct investments. Foreign direct investments is one of a huge topic in to be covered, and it is one of the most talked about topics. Now, during the year 2020, when the world at large was suffering from pandemic, India received its highest inflow of FDI. In the financial year 2021, India recorded a US FDI inflow of $81.72 billion US dollars. Which was highest in as compared to last year, which was 10% higher in terms of last year. Now, what happened was when 2020, when COVID struck, India decided to, in order to halt its opportunistic takeovers, India passed a new notification and amended its manual, whereby it said that any entities sharing land borders with India would require prior permission from the government in order to infuse capital into the country. This was mainly done to avoid opportunistic takeovers. On this one end, this was a regulation. Looking at the FDI inflow and the higher FDI inflow, the government decided to increase the FDI limit to encourage foreign investments into the country. The government decided to increased in the defense sector from 49% to 74%, in the insurance sector from 49% to 74%. Again, under the automatic route, single brand retail trade regulations were relaxed up to 100%, and digital media, we saw 26% foreign investments in mass media and news circulation. Coming back to my second okay. Now that we have all seen that how has India taken its massive strides in terms of incentives, in terms of its benefits that are being granted, especially to small scales and medium scale enterprises, what has happened is the FDI inflow in India has reached its new highs, and it's recorded in 2021 there has been an increase in the startup companies, and data has shown that 63 Indian corporates raised an all-time high of 1,18,704 crores through the main board IPO, and 44 new startups became the unicorn of the year. And especially in terms of receiving an FDI inflow of 39 billion US dollars in the year 2021. These FDI inflows are mainly targeted in Tier 2 and Tier cities of India, especially in cities like Pune, in cities like Indore, in cities like Haryana, where there are manufacturing, where there is a comfort of land, when there is a comfort of labor, when there is a comfort of facilities, when the government approvals are easy to obtain. In these areas, especially in Tier 2, Tier 3 cities, especially in terms of India being such a price sensitive country, where the cost of setting up a manufacturing unit in Tier 2 and Tier 3 cities is much cheaper as compared to a Tier 1 city. So to encourage that, and especially with, as we all see, that the SEZ amendment, the special economic zones that have been implemented in these cities, it has always been beneficial for companies and for manufacturing units to establish themselves in these cities. And what now looking at sustaining India's growth, what is the country's roadmap? What does the country plan to do? It plans to do at 3 levels. One is the macro level, second is the micro level, and third is the national infrastructure pipeline. At the macro level, now as we all saw, that pandemic hit the country really hard, and at that time India was unprepared, especially in terms of the digital economy, especially in terms of having data on the internet. India at that point of time, before 2020, as I remember, because I've been to India and I've been traveling from China to India, and we've been shuttling between these two countries for a very long time. And I have seen that before 2020, India had still a primitive approach towards digitalization. You had to still manually go and file. You had to actually go ahead, and there were signatures needed, manual presence was needed. Even in courts, it was very difficult to carry on any process without if the person was not there. So now, considering pandemic hit and everybody was asked to stay at home, India decided to increase its digital economy. How did it decide to increase the digital economy? Is by giving incentives to startup companies, by making it into a fintech technology, by setting up a cloud cloud sector wherein people would transfer data, or people would have these video conferences online, and it would be very easier to now have all the procedures that were done initially where it required physical transfer. Now it was easy to do it by way of just digitalization. So one of the major tasks of India to promote is digital economy, especially when we see the highest number of Indians in our Silicon Valley in US, and where IT in our country is supposed to be one of the most prestigious places to study, and one of the most prestigious degrees to take. So take this opportunity, have the country digitalized, and is to enable digital technology, and so to promote digital economy, fintech, technology enabled development, energy transition, and climate change. At the micro level, when it wants to help, especially the medium and small scale enterprises, they extended the credit limits guarantee schemes for these small scale enterprises. They changed the credit guarantee schemes for these enterprises. They implemented RAM programs for these MSMEs. The third being the National Infrastructure Pipeline. Now, this is a 5-year program that is being implemented by the country, and it hopes to achieve its target by 2025. And every year, the country, India, has been increasing its budget in a private partnership model to enhance the infrastructure. And this year, in this fiscal year, in the budget that has come out, the finance minister has increased the budget by 35% as compared to last year, to invest into building of infrastructure, energy, road, urban, and railways. So we've again seen that infrastructure and growth is one of the most essential pivotal roles in carry on the economic development of a country. Next, please. Now, let us understand what lies ahead, what the key sectors that we need to watch out for, or what is the government doing in order to assist assist the manufacturing units, to welcome them and help assist them. So the first being the automobile sector. There have been incentives being granted with 26,000 crores as well as 18,000 crores, and they've launched the product linked incentive schemes, and these schemes are basically to develop to encourage manufacturers to come to India and to set up their base and units in India, and there will be subsidies in terms of tax rebates, or in terms of land being considered to be cheaper, and to encourage the automobile sector in India. The country has also launched the FAMS 2 scheme, which is again dealing with increased technology for the manufacturing in India. The second being the textile sector. Now, this sector was hard hit when there were sanctions, because of the sanction imposed by on Chinese textiles, and taking this opportunity, India decided to include initiatives or incentives to build mega textile parks. And these parks will be basically under the SEZ zones, where they will be given central as well as sales tax rebate. Now, the third being the retail sector, which was one of the most highly affected sector during the COVID-19. So to increase the inflow of the cash flow in this sector, the government decided to incorporate digitalization, new age technology, by creating an online and offline channel. And e-commerce has definitely definitely created one of the greatest transformation in the retail sector. And this has been helpful, especially in terms of understanding the consumer market, in understanding the trends in the market, and especially in terms of keeping the especially for small time local investors, small time businesses, is important to have the churn or the liquidity in the country due to this retail sector. The fourth being the fintech sector. Now, this is one of the critical sectors, and it is a critical commodity, especially it's one of the most important sectors, and it's essential to have this sector afloat, especially when it comes to transferring of the amounts and to financial, to ensure that there is financial liquidity in the market. So the government has launched programs to advance technology along with provide incentives in this sector. Next, please. Now, the fifth being the pharma and the healthcare sector. Of course, when we saw COVID-19, we saw that the sector was mainly affected. And at the beginning of COVID 2020, it was difficult to even get the APIs to manufacture drugs in India. And taking that into consideration, and the government has launched schemes to create incentives for local manufacturing of these APIs. All these schemes have been valid till date, and the country's increasing its has been increasing the schemes and been giving in more incentives to all the manufacturers, to all the companies interested in these sectors. There has been an expand in investment in digital healthcare technology, and the business is expected to rise by USD 372 billion by 2022, by the end of 2022. Now, another sector that we're dealing with is the renewable energy. This has been on top of the charts for in terms of climate change, in terms of environment protection, and India has also been taking measures to follow suit. And they've been focusing on electronic vehicles, solar equipments, green hydrogen, and wants to achieve its massive target of 175 gigawatt. And there has been an estimate investments of USD 15 billion by the government, and it's proposed to be a third in world ranking by the end of this year. My last sector being the chemical sector, and India has been a major dye provider, and it accounts for 60% of the global dye stuff. By 2020, India's dyeing sector would be worth USD $63 billion. And coming with this, there has been looking at these sectors, is essential that manufacturing companies should consider these options available. And of course, every sector has their own specific laws attached to it, and every region has their own regulations that needs to be followed. And of course, we are present over here to guide you with all these nitty-gritties in terms of legal as well as financial sectors. Next, please. Okay. Coming to the end of it, what do we see out of the growth that has been out of the initiative being taken and the growth that has been projected by the government? We have strong indicators of economic growth, especially 85% of upswing has been seen in the year 2021, and that has been a great challenge for India to reach. We've seen the highest private equity investments amounted to $43 billion in the year 2021. More than 40% of GST has been collected, and the employment growing opportunities are great, because the unemployment rate has been drastically going down, and especially in terms of the PLI schemes, the production link schemes that the government has initiated. The government plans to open up 20 million jobs by the end of this year, 10 million jobs by the end of this year in the organized sector, and 35 in the unorganized sector. So there has been a lot of growth and opportunity in especially in terms of employment and in the terms of job market. And the cherry on the toast will be the latest IMI projection of India, wherein they have the IMF have projected an 8.2% of growth, which makes India the highest and the fastest growing major economy of the world. Now, taking all that into consideration, this is an important time for companies to invest into India, especially tapping its rural market. India has known for its economy growth since liberalization in the year 1991, when the country opens its doors to the foreigners, and since then there has been high growth in the trajectory of the country, and it will continue to remain the fastest growing economy in the world. And if somebody had to ask me on when is the good time to invest, I would say now, because at this point of time the companies would get the most suitable deals in terms of land, in terms of manufacturing, in terms of technology, in terms of growth, because this market and with the highest, this market is untapped, and especially in terms of the population that India has and India's projecting towards, this market is going to be huge, especially in the next coming years. Thank you so much for your time and patience.
Thank you very much. Thank you, Bosky, for giving us such a comprehensive overview of the current legal frame and how it has been converted and how it reacted to the pandemic emergency. Thank you, and I would like now to pass over to the next speakers.